The latest ISM Manufacturing PMI came in below expectations at 49, contracting in the month of March after 2 months of expansion. Slowing activity and rising prices suggest the U.S. could be heading toward stagflationary territory. For a deeper dive, I want to be joined by Tim Fiore. He's the ISM Manufacturing Business Survey Committee Chair. Tim, thanks for joining us. Talk to me about stagflation in this print. Is that what you're seeing?
Well, I think the biggest message in the report this month is that we're declining in revenue, or we're declining in output, and we're continuing to release people because we're not sure about the near term and moderate term future here. So that's the real story. This is if you look at the details on this, the demand side is still weak. We've got 3 or 4 demand indicators that are negative and heading in the wrong direction. And that's pretty much because of the uncertainty. We're not really sure what this whole tariff portfolio is going to look like. Hopefully this week we'll add some clarity to it and we'll be able to move forward, because whatever it is, let's get on with it. We're tired of studying it. There are so many different elements and variables to this thing. Here we are a day before release and we still don't know the details of what tomorrow is going to look like. So, okay, let's get that resolved. The input side, we're stocking up on product to try to avoid tariffs, but it now kind of feels like these tariffs are going to be with us for a while. So at most, we're stocking up maybe a quarter worth of material. That will go quickly, and we're going to be into tariff material in short order here. Suppliers are struggling to some extent because we're still arguing about price increases, as well as probably some blockage at the ports because you have to pay before you can get your product released now. And then, like I said, I think the biggest story here is that our production is down, our employment is going down with it, and that's our investment really in the future, the employment. Remember how hard we worked to staff up in the last 4 or 5 years? Well, we're now going to be cutting into more serious bone here, I think, because we have been destaffing for over a year. And we thought that this would stop probably in January. And here we are now at the end of March, and we're still destaffing at a sizable level. The good news is we're not laying off, we're attriting down, which means that we're taking it slower and it's not as expensive. But, hey, the last thing on this thing, Madison, is if you did a normalization for the inventory number being high because we did the pull forwards, this would be in the range of 48, 48.3. And think of it that way. This is not a disastrous report, but it's not meeting the growth projections that we started the year with. And we started the year pretty confident. We've had 5 reports now since the new administration came in place, and we're pretty much where we were in October before the election. And right after the election, we were feeling really good. Our sentiment is getting worse. We're down to 1 to 2, meaning that 3 people, 2 of them aren't feeling good.
So Tim, this is Christina. Just a quick question for you on what you think the bigger risk is coming through in the survey. Is it the uncertainty, the unknowing, or would it be if tariffs were significant and we were told they were long lasting? What do you think is the bigger problem?
Well, I think it's the uncertainty, it's the unknowing, because we're all going to be in this together. If you're a U.S. manufacturer, if you're selling goods in the United States, we're all going to face the same issues. Some of us will have more serious issues than others, depending on what strategic decisions we made 10, 20 years ago, or even 2 years ago. All that stuff we tried to get out of China and put into Mexico might end up getting tariffed tomorrow. So I think the biggest issue here is the unknowns. Because as competitors, we're all going to be faced with the same issues. Yeah. So let's get in there and fight. Let's get on with it. Let's get on with it. And I think, as I said this morning, we heard the number of $600 billion of annualized tariff income that Peter Navarro has expressed, and I think he expressed the opinion of the administration. That's $600 billion being pulled out of the U.S. economy. Yeah. How does that not lead to a decline in demand? I don't know how it doesn't lead to that.